Recently, the crypto market has been hit hard, and in the last few days of August alone, the crypto market lost roughly $100 billion. Yeah, that's billion with a B. Now, the crypto market is well below its long-touted trillion-dollar market cap. So stay tuned and don't go away, because we've got mooners and shakers. No soft landing for crypto after a big fall. First up, will the crypto market correct itself in September? That's doubtful. September is looking grim, not just for the crypto market, but for other financial markets as well, including the stock market. A number of market analysts are predicting the start of a bull market, possibly sometime in October at the earliest. So for September, we're likely going to see a repeat of the last few months, which has essentially been a consistent downtrend with small, periodic rallies interspersed throughout, but they never seem to hold. Fed Chair Jerome Powell's Jackson Hole speech did not inspire confidence, and Bitcoin's own history has done nothing to quell investor fears or anxieties. Taking all of that into consideration, September is likely to be rough. Ethereum and Cardano have been leading the charge downward, yet both of the rivals have some positive things coming in their near future. Ethereum's merge to proof of stake and Cardano's own upgrade, Vassal Hard Fork, have been carefully designed to improve throughput and scaling capabilities respectively. But Ethereum's merge is supposed to be the new school of thought that's gaining momentum. However, it's likely just another PR designed to give Ethereum a quick pump, so some investors have the chance at selling for a 10 to 20% profit, even if it's being heralded as a long-term positive transformation for the future of the network and its growth. Next up, is Ethereum about to hit $500 per coin? Let's take a look. Famed crypto YouTubers Hisoshi Ilio Trades and Benjamin Cowan have a bearish outlook on Ethereum. According to the latest bearish thesis, Ethereum is likely to experience a post-merge dump, and they're projecting a hard pullback to somewhere in the neighborhood of $500 per coin. At the time of this recording, Ethereum is sitting at $1,559.08 per coin. $500 per coin is considered a lower support line for Ethereum and what some call an accumulation range. That is to say, a price point where scores of investors are likely to load up and buy a lot of Ethereum. If Ethereum does hit $500 per coin, it probably won't drop much further, give or take a few dollars and cents, and it's likely to rebound strongly from there. But Ethereum may not be the only coin to take a hit post-merge. Word on the crypto street is that merge could cause the price of Bitcoin to plummet as well. Bitcoin has had a brutal summer, and the last thing it needs is another reason for its price to drop. For months, Bitcoin holders have been praying for a break, but it doesn't look like they'll find it in September. Up next, is the Bitcoin network about to be regulated to death? Let's dig a little deeper. Independent crypto researcher Kyle McDonald is predicting that the Bitcoin network will essentially be regulated to death, which will likely cause the price of Bitcoin to crash hard. For McDonald, Bitcoin is currently a strong sell. McDonald's reasoning is pretty straightforward. According to McDonald, after the Ethereum blockchain switches to a far less energy-intensive method of validating transactions, or proof of stake, investors and regulators will come to realize that the energy-intensive method that both Bitcoin and Ethereum currently utilizes, which is known as proof of work, was never really necessary in the first place. McDonald argues that the ongoing climate crisis and Bitcoin's own massive energy consumption will be the death nail in the flagship coin's coffin. McDonald said, Bitcoin doesn't have the coordination like Ethereum to leave proof of work, and it'll likely be the first to be regulated away. Bitcoin's energy consumption is a major source of contention for environmental activists and various governments around the world. McDonald theorizes that Bitcoin will never see a price of $69,000 again, which is where it was trading in November of 2021. Ethereum's software update, the Merge, is slated for launch in October, and apparently the blockchain will require the use of fewer computers to function. Stay tuned and don't go away, because we're bringing you the latest crypto news. Next up, what are Ethereum staking pools? You're about to find out. Ethereum staking pools are a popular yet semi-controversial way for investors without the funds or knowledge to cash in on network validator rewards. If you're late to the party, not to worry, because there's plenty of time to get involved. The Merge software update is projected to use more than 99% less energy according to the Ethereum Foundation. After the Merge update takes effect, it'll be validators and not miners who will be tasked with verifying transactions and adding them to the blockchain. Like miners, validators will earn rewards for their efforts in securing the network. The The only issue is that to become a validator, there's a substantial entry fee that comes with a great deal of risk. So if your risk tolerance is low, you might want to reconsider becoming a validator. If your tolerance is high and you want to become a validator, you'll need to deposit 32 Ethereum coins as collateral, which is worth roughly $52,000 at the time of this recording, so that you can maintain your own hardware and software and avoid costly downtime penalties. In order to participate, people store their Ethereum with a third party, such as Lido Finance or Coinbase, and those entities use the funds to set up validators. In exchange, the third party takes a cut of the rewards and gives the rest to depositors. Up next, who are the biggest Ethereum staking pools in the crypto market today? Let's take a look. There are more than 420,000 validators worth $22.3 billion worth of Ethereum staked on the Beacon chain. 30% of all staked Ethereum is controlled by Lido Finance. It's the largest of all Ethereum staking pools. 15% is controlled by Coinbase, and 8 and 7% are controlled by Kraken and Binance, respectively. That means more than 60% of staked Ethereum is in the hands of only 4 entities or staking pools. So, what does that mean? Well, think of staking pools as a real estate investment trust, or REITs. An REIT allows people to gain exposure to investment properties without having to buy them on their own and split the income. If 4 REITs controlled 60% of all housing, it's almost unfathomable to think of what they could do to the market even if just one of them decided to block certain people from buying or renting homes. And this is why staking pools, while beneficial, are controversial and drawing a lot of attention. Some argue that having single entities controlling large groups of validators undermines the notion of security through decentralization. Lido Finance and its staked Ethereum are by far the most popular staking pool. Lido launched the liquid staking token back in 2020, just before the Beacon chain was formed. The liquid nature of the token means that Ethereum depositors receive steth and can sell, trade, or loan their steth while their Ethereum remains locked up with Lido Finance. Next up, is Bitcoin a pointless and wasteful Ponzi scheme? According to Nobel Prize laureate Paul Krugman, the answer is yeah, totally. Paul Krugman has been a long and harsh critic of Bitcoin and other cryptos for at least the past 10 years. He's a Nobel Prize-winning economist known for speaking his mind, and in addition to calling Bitcoin pointless, wasteful, and virtually worthless, he insists that crypto is nothing more than a tool for criminals and a Ponzi scheme. Krugman says cryptos are only valuable because of the hype and speculation surrounding them, and that they hold no intrinsic value. Essentially, what Krugman is saying is that crypto is sort of like a fly-by-night meme stock. Krugman is also a New York Times columnist, and he uses his platform fairly often to slam the crypto industry for enabling criminals, making transactions more complicated than they have to be, and worst of all, preying on vulnerable people. In Krugman's eyes, Bitcoin and other cryptos are obviously pyramid schemes. Another talent that Krugman is credited with is being somewhat of an economic/philosopher poet. Not a real poet, but a king of quotes, you could say. Here's an example. On April 12, 2013, Krugman wrote an article for The Times titled, "Adam Smith Hates Bitcoin." In the article, Krugman was quoted as saying, "People think it's smart, nay, cutting edge, to create a sort of virtual currency whose creation requires wasting real resources in a way Adam Smith considered foolish and outmoded in 1776. Finally, what was one of Paul Krugman's most recent anti-crypto quotes? On July 11, 2022, in a New York Times article titled "Crypto is Crashing, Where Were the Regulators?", Krugman was quoted as saying, "The way I see it, crypto evolved into a sort of postmodern pyramid scheme. The industry lured investors in with a combination of technobabble and libertarian derp. It used some of that cash flow to buy the illusion of respectability, which brought in even more investors. And for a while, even as the risks multiplied, it became, in effect, too big to regulate." No pun intended, but I always like to look at both sides of a coin, and part of me feels like Krugman may not be that far off. What do you think? Drop a comment below and let us know your thoughts. That's a wrap for today's video. Don't forget to like and subscribe. Thanks for watching.